Hello everyone, welcome to EduTap and welcome to Finance Current Affairs session. In today's session, we are going to discuss a very important news article of finance that is regarding the Reserve Bank of India that has released the notification regarding the extension of the dates for the enhanced HTM limit. So there is the extension of the dates that has happened, and what are those days? What is this enhanced HTM limit, as well as the RBI has shown the phased path for this enhanced HTM limit to reach to the prior HTM limit. So what is this enhanced HTM limit? What is this prior HTM limit? What is this phased path? So all of this we are going to discuss in today's session, and we will have the clear understanding of this news article as it is very important from the exam point of view. Now, before starting with this news article, there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook, you can get all the answers of your common queries. The definitive answers are provided in this comprehensive guidebook so that you do not have to visit different links. You do not have to visit different websites. Okay. A single source is provided so that you can get definitive answers regarding any query that you have for the examination. That is, what is the pattern of the exam? What is the syllabus for the exam? What are the previous year cutoff for the exam? Even if you want to know about the preparation for the exam, that is, what are the sources for the preparation? What should be the strategy for the preparation? All the answers of the common queries, the definitive answers of the common queries are here in this guidebook, and you can easily download this guidebook. This is absolutely free of cost. First of all, to save your time, to save your effort, this has been made free of cost, and you can easily download this guidebook. The link is provided in the description box below, and this is going to enhance the level of your understanding regarding the examination. Okay. So now, starting with today's news article, starting with the notification that has been provided by the RBI. So first of all, the news article is regarding the RBI that has announced, the Reserve Bank of India has announced the extension of the dates for the HTM limit. Okay. So before understanding this extension that has happened, okay, and the RBI notification is here, that is regarding the review of SLR holdings in HTM category that has been released on December 8, 2022. So before understanding this review of SLR holdings in the HTM category, let's understand that what is this HTM category. Then only you will be able to understand the extensions, or you will be able to understand the phased path. So first, let's understand the HTM category before moving to this news article. Okay. So see, first of all, the categorization of investment. This is what the HTM category is. The investments of the banks have been divided into three categories. Okay, here you can see that the banks shall classify their entire investment portfolio in three categories. Okay, the first category is the HTM, that is held till maturity. The second category is held for trading, and the third category is available for sale. So here, with the name itself, you can understand some of it, that here in the held for category, such kind of investments are there in the securities. The investment in the securities are made that is held till maturity, that the banks have to keep till maturity. Okay, so the banks are keeping some securities with themselves till maturity of those securities. Now the other securities that the banks have bought, let's say the banks have bought the bonds, and now the bonds, the prices of the bonds has increased, and the banks want to sell it now. So held for trading, these are the securities that are held for trading, and they can trade it in the secondary market. They can trade such securities in the secondary market before the maturity also. Okay, so these are the securities that are held for trading. Now this is the available for sale. These are the other kind of securities that are not kept in the HTM or the HFT. Okay, so I hope you have understood that the investment portfolio of the bank is divided into three categories. The first is HTM, held till maturity. So the securities that are held till maturity by the banks, they are coming under this category. Now the other kind of securities that are the banks are keeping for trading. Okay, whenever the bank needs the money, whenever the bank thinks that it is providing profit, the bank can sell it. Available for sale is the third category, in which the other kind of securities come. Okay, so the bank has to tell regarding the security. Let's say the bank has bought a new security. Now the investment that has been made in this security is for the held for trading or held for maturity or what kind of category it is. So while the purchase only, the bank has to tell that in which category the bank want to keep this kind of security. Okay, so at the time of the acquisition only, the bank has to specify that in which category the investment has been made. So this is the three categories and the held till maturity we are going to discuss now. Now we were talking about review of SLR securities. So what are these SLR securities? So let's understand that. So here, see, the SLR securities are eligible for inclusion under the HTM category. First of all, what is this SLR? We all have heard about the CRR and SLR. First of all, CRR is cash reserve ratio and SLR is statutory liquidity ratio. So SLR is what? SLR is a percentage of the net demand and time liabilities of a bank that the bank has to keep with itself. First of all, the net demand and time liabilities means the deposits that are happening with the bank. Okay. So the demand and time liabilities. So liability, the deposits that are happening with the bank are the liability of the bank because the bank has to return those deposits. I am making the deposits with the bank, that is the liability of the bank to return to me when I need or after a point of time. So these are the net and demand liabilities means they are the deposits that are happening with the bank. Now from these deposits, from these net deposits, the bank has to keep some liquid assets with itself. Now the bank is going to use those deposits to make the loans, to make the investment and other things. Now from these deposits, the bank has to keep some percentage of the SLR. Right now it is around 18%, I guess. If I'm wrong, do correct me in the comment section below. So 18% of the net demand and time liabilities the bank has to keep with itself. Okay, in the liquid asset form. Now liquid asset means in the form of cash, in the form of gold, or in the form of the securities that are made eligible by the RBI. I hope now you understand that what are these SLR securities. So they can come in the HTM category. Now the SLR securities are the dated securities of the government of India that is issued from time to time. The treasury bill of the T-bills of the government of India and the state development loans of the state governments that is issued. Any other instrument that is made like eligible by the Reserve Bank of India. So in the SLR securities, the government securities come. In the SLR securities, the government securities come. The T-bills come. The state development loans come. So under the SLR categories, the SLR securities, it is government securities. Okay. So I hope you have understood. Now these SLR securities, now this approved securities can come under the HTM category of the investment that is made by the banks. So the HTM means they have to keep till maturity. The banks has to keep this SLR securities that are coming in the HTM category. The bank has to keep it till maturity. Okay. So the current ceiling of the total SLR securities held in the HTM category is 19.5% of the NDTL. Okay, that is 19.5% of the net demand and time liabilities, that is the net deposits they can keep in the HTM categories of the SLR. So 19.5% of the NDTL of the SLR securities they can keep in the HTM category. Okay. So now what has happened? What is the news article now? I hope you have understood that the SLR securities can come under the HTM category. Okay. And SLR securities are what? They are the government, they are these kind of securities. They are the safer securities, we can say. They are less risk securities or risk-free securities that are available, okay, to the banks, and they can keep it under held till maturity, that is they can keep it till maturity. Like the T-bills, if they are maturing in 364 days, so they have to keep, the banks, if the securities under the HTM, they have to keep it till maturity, till 364 days end. Or if it is for the 91 days, till the 91 days finish, they have to keep the maturity security with themselves till maturity. So now at present the banks have been granted a special dispensation of enhanced HTM. Now it is 19.5% of the SLR of the NDTL that you can keep of the SLR securities in the HTM category. Okay, this seems confusing but very easy. 19.5% of the deposits you can invest in the SLR securities that you can keep till maturity. That's it. So now this This limit of 19.5%, this was enhanced to 23% of net demand and time liabilities. Okay, this was done in April 2022. That is, the RBI had increased the limit from 22% to 23%. So before it was 19.5 and slowly it was increased till 23% because the COVID situation was going on. Then there was the Russia-Ukraine war. So there was the need for the such kind of securities to be kept with the bank for the safety of the bank, to provide a foundation, good foundation to the bank, a risk-free foundation to the bank, as well as the SLR securities are what? It is the loans that are given to the bank because they are the government securities. So the government also needed a lot of the loans to provide the infrastructure to the people. The COVID situation, they needed the money. The government needed money. So that's why also the SLR securities was increasing. The government wanted a lot of loans and the banks had to provide that money in a way. Through the SLR securities, they were providing the money. So that's why the limit was raised for the SLR securities, so that more SLR securities can be bought by the banks for providing the money to the government in the form of the loan. So that's why the limit was slowly raised, and in April 2023, the limit was raised from 22% to 23%, and it was said that the limit is for what? For what day? Till March 31st only. Till March 31st, 2023 only, this limit has been raised from 19.5% to 23%, and slowly this limit will be decreased to 19.5% again. Okay. So the eligible securities that is acquired between September 1, 2020 and March 31st, 2023 until March 31st, 2023 will come in the enhanced HTM limit. After that, the limit will again be decreased. After March 31st, 2023, the limit will again be decreased. But what happened that on a review, it has been decided to further extend the dispensation of the enhanced HTM limit of 23% of the NDTL up to March 31, 2024. So what has happened that now from September 1, 2020 till March 31st, 2024, the banks have the extended limit of 23, enhanced limit of 23% of the NDTL that they can keep of the SLR securities, that they can invest in the SLR securities. 23% of the NDTL they can invest in the SLR securities that are coming under the HTM category. So I hope you understand that the date has been increased. Before it was September 1, 2020 to March 31st, 2023, but now the date has been increased from September 1, 2020 to March 31st, 2024. That's it. The extension has happened of the date. So from now, the securities that is acquired between September 1, 2020 to March 31st, 2024, it comes under the enhanced limit of 23%. So here you can see, okay. So this April 2022 I have shown you so that you have the clarity also that in this year only 22% has been increased to 23%. Okay. So now the RBI has shown the phased path that we have to go back to 19.5% because this was the actual percentage. This is the actual percentage. The ceiling that is there. The ceiling is 19.5%. Above 19.5% was only because the COVID situation was there. The government needed the money, needed the loans, and for that the banks was the easy option to buy the government bonds so that the government can have the loans. So that's why the SLR securities limit was raised for the banks so that the banks can invest more on the government loans, more on the government bonds, and can provide the money to the government that the government needed in the COVID situation, in the situation of the Russia-Ukraine war that was going on. There was much volatility, and these securities, these government bonds, they provided a safer option for the banks also. Okay, so the RBI wanted them also to, the banks also to have a safer securities with them, to have the safe option, safe foundation with them. Okay, so now provided that the banks may exceed the ceiling up to an overall limit of 23% of the NDTL instead of 19.5% till March 31st, 2024. So here you can see that in the notification the date has been extended to March 31st, 2024. Provided such excess is on account of SLR securities that is acquired between September 1, 2020 till March 31st, 2024 only. Okay. So provided that the excess SLR securities acquired by banks During these dates shall be progressively reduced, and the phased path has been shown that how this will be reduced. How 23% will be reduced to 19.5% of the NDTL that is being invested in the SLR securities under the HTM category. So the phased path has been shown that by June 30, 2024, the 23% should come to 22%. Then till September 30, 2024, the 22% should come to 21%. December 31, 2024, the 21% should come down to 20%. And by March 31st, 2025, the 20% should come down to 19.5%. So in the whole news article, what we have understood is that the NDTL, 23% of the NDTL is the enhanced limit of the SLR securities, of the investment in the SLR securities. So 23% of the NDTL can be invested in the SLR securities that will come under the HTM category of the investment that is made by the banks. Now this 23% of the NDTL is enhanced category till March 31st, 2024. Till March 31st, 2024, they can invest 23% of the NDTL in the SLR securities. After that, there is a phased path that has been shown that after 31st March 2024, they have to slowly come down to 19.5% of the NDTL that can be invested in the SLR securities in the HTM category. So this is the complete news article. I hope you will remember the dates, you will remember the percentages, that 23% is the enhanced limit. The actual limit, the actual ceiling is 19.5%. Okay, and there was the phased path to increase this also from 19.5% to 23%. There was the phased path to increase it. Now it has been provided the phased path to decrease the 23% to 19.5%. The RBI do not take the steps like this, that today I am saying do it 19.5%, tomorrow do it 23%. It doesn't happen like that. There is a phased path always. Okay. So now this is the first question that I hope you can easily answer, and this is the second question that I hope you can easily answer now, and you have understood about the HTM category, about the SLR securities that are under the HTM category. Okay. So these were the people that gave the right answer of the previous session question. It was Kari, Yash, Vardhaman, Black Shadow, Simran, Rishabh, Aarti, Maddie, Lucky, Vivek, Anand, BK, Himanshu and Nilesh Suryavanshi. Thank you everyone, and thank you so much for replying. Thank you so much for answering. I hope you have understood today's news article, and do subscribe to our YouTube channel and join our Telegram channel for the PDF. The PDF will be uploaded in the Telegram channel. And thank you very much everyone. If you have any query, you can mail us here or you can contact us through this number. Thank you very much.